My issue with delta neutral, non-directional options trading strategies. David Jaffe with Best Stock Strategy. Yes, I know that I look ridiculous with the blue blocking glasses and the nasal dilators. It's after midnight and I'm going to sleep immediately after I record this video. So my issue with delta neutral and non-directional options trading strategies is that the market has a tendency to go up. Now, I'm not saying that non-directional options trading strategies don't work, because they definitely do. But are they ideal? Are they optimal? And because the market has a tendency to go up, in my opinion, I think that most options traders should have a long bias while simultaneously hedging for the tail risk and for those outlier moves and those large volatility expansion events. I think that by having a long bias and by hedging, you will outperform a delta neutral, non-directional options trading strategy. Now, what I just said is definitely up for debate because I haven't done a significant amount of back tests to validate that. However, when you take into account that the market has a long and bullish bias, I think the key to being profitable in all market environments is to make sure that you hedge against those large volatility expansion events where the market falls 5 to 10% in a week or two, or where the VIX spikes up from less than 15 to 28 in 5 days. So in my opinion, as long as you hedge out that risk and you use some high probability trading, and you also are loss seeking so that the occasional trade that goes against you, you simply close it out relatively quickly, then I believe you can be consistently profitable in all market environments. And I believe you'll do better than someone else who is delta neutral in trading a non-directional options trading strategy. Now, as a quick aside, the way that you hedge is extremely important. You definitely need to buy long-dated put options. Tasty Trade used to hedge in the most foolish way possible, and I don't know why they would do this, considering that they would frequently brag about spending millions of dollars a year on independent research. But the way that Tasty Trade would hedge is by selling call options. The problem with this is that by selling call options, you're basically hedging out around a 3 to 5% downward move. However, on anything larger than a 5% move, then those short call options are going to be worthless because your maximum profit when you sell those call options is going to be the premium that you collected. As a result, once those call options expire worthless, then they are no longer providing you any advantage to hedge out the downside risk. Additionally, because the market has an upward bias, those short calls that they sold as hedges would frequently end up getting tested and end up losing them a lot of money. In fact, Karen Bruton, the super trader who was sued by the SEC and barred from the industry and fined $1.5 million, I believe that the majority of her losses came from selling call options and having those call options get tested and show significant losses when they were marked to market. So basically, by selling those call options as a hedge, you're trading pennies and losing dollars if the market corrects by over 5%. That's why if you want to hedge, you have to make sure that you buy options. And actually, I've been doing some research recently and I haven't made a determination yet, but I believe that buying in the money put options could potentially be better than buying numerous out of the money put options. But I'm not 100% certain on that. I want to run some additional testing and run some experiments before I make a final determination on that. So in summary, if you want to hedge out that tail risk, then make sure that you buy options. But trading a delta neutral or non-directional options trading strategy, I really do think that you're leaving money on the table. However, do I think that trading that strategy is profitable in all market environments? I definitely do. So I'm not in any way being critical of that strategy because I know people who trade that strategy and they're incredibly successful. However, is that trading strategy optimal? I'm just not 100% sold on that. Leave a comment below and let me know your thoughts, and I'll do my best to answer your questions.